What is Forex trading? Hello and welcome to this beginner's guide to Forex trading in 2026. Now, why do I qualify to teach you about Forex? Now, the first reason is that I have 6 years of experience when it comes to Forex trading. Now, the second reason is that I have 2 years of experience when it comes to teaching Forex. I have also traded multiple personal and pro firm accounts. Now, these are the reasons why I qualify to teach you about Forex. Now, moving on, in this video we are going to look at what is Forex trading and how to make money from the Forex market. We are also going to look at when to trade the Forex market, because we cannot trade the Forex market every single day. Now again, we are also going to look at the best education for Forex beginners. In the title, Forex education for beginners, a lot of people out there are confused about where to get the best education when it comes to Forex trading. And we are also going to look at how to create your first Forex account. Now again, we are going to look at a bonus strategy that I'm going to show you on how to place your first trade in the Forex market. Now, the last thing and one of the most important things in Forex trading psychology, very, very important. You know what it is all about when we get there. Now, what is Forex trading? Now, Forex trading is a global market where currency pairs are bought and sold. Now, these currency pairs are divided into 3 major categories. Now, the categories are the major pairs, you have the minor pairs, and the exotic pairs. Now, on the major pairs, we have Euro USD, which is the euro and the dollar. We have GBP USD, which is the pound and the dollar. We have AUD USD, which is the Australian dollar and the US dollar. We have NZD USD, which is the New Zealand dollar and the US dollar, I beg your pardon, which is also known as the Kiwi dollar. We also have USD CHF, which is the dollar and the Swiss franc. We have USD CAD, which is the dollar and the Canadian dollar. Now, these are some of the major pairs. Now, and the minor pairs, some of the pairs include Euro CAD, which is the euro and the Canadian dollar. GBP JPY, which is the pound and the yen. Euro JPY, which is the euro and the yen. GBP CHF, which is the pound and the Swiss franc. Now, under exotic pairs, we have USD TRY, which is the dollar and the Turkish lira. We have USD ZAR, which is the dollar and the South African rand. And we have USD MXN, which is the dollar and the Mexican peso. Now, we have over 150 pairs or currency pairs that you can trade in the Forex market. As a beginner, I would advise that you stick to the major pairs only. Okay. Now again, the Forex market is the largest financial market in the world with a daily turnover of around $7 trillion. That's very, very amazing. Now, this tells us that there is a lot of money to be made every single day. So this is your time to trade. And there's a lot of money for everyone. There is no competition here, right? Everybody can make some money in the Forex market every single day look at the amount. Now again, let's look at the players in the Forex market. We have 2 main players in the Forex market. We have the retail, which is me and then you, and we have the institutional players, right, which include the big banks and the hedge funds. I'm talking about HSBC, I'm talking about JP Morgan, right? These big institutions are also very active when it comes to the Forex market. Now, the institutional traders are where majority of the trading volume comes from. All right. Yes, this is where the majority of the trading volume comes from, because obviously they trade in millions and billions of dollars when it comes to Forex. All right. Now, how do you make money in the Forex market? Now, the Forex market is a speculative market. Speculative market meaning that you make future predictions with respect to where the value of a particular currency pair will go. All right. Now, the predictions that you make are based on empirical analysis. It's not guesswork. All right, you are not guessing. You are going to make that speculative decision based on a pre-analysis that you have already done before you take that decision. I hope you get it. Now, what do you speculate with? Let's get much deeper into it. Now, the two types of analysis that we have in Forex that we use in the speculation. The first one is called technical analysis, all right, which has to do with using historical price movement to predict future price movement. All right, using historical price movement to predict future price movements. That is technical analysis. And then the second analysis that we have in Forex trading is called fundamental analysis, which has to do with the use of news, economic data, and geopolitical events to predict the movement of price. So when you are speculating, if you speculate that GBP USD will actually go up, that is a buy speculation, or you are buying. Again, if you also predict that the value of GBP USD will go down, that is also what a sell speculation. So these are the two differences, right? So in actual fact, anytime that you feel that GBP USD as a currency pair, its value will go up, it means that you are preparing to buy GBP USD. All right, the simplest term for you to understand. Again, if you also speculate that GBP USD will go down, then you are also speculating to what? Sell. So that is why it's called a sell speculation. Now, when it comes to calculating profit in Forex trading, there is one concept that we cannot overlook. That concept is called lot sizes. Now, lot sizes has to do with the units of currencies that you place on a particular trade, whether it's a buy trade or a sell trade. You always have to make use of lot sizes. All right. Now, we have three main lot sizes in Forex accounts. We have the standard lot 1, which represents 10 units of the base currency. If we place two standard lots, it also means that it translates to 20 units of the base currency. Now, the next one, which has to do with the mini lot, is 0.1, which represents 1 unit of the base currency. And then the last one, micro lot 0.01, which translates to 0.10 units of the base currency. That is lot sizes for you. I believe that you understand it better when we actually start the calculation of profits on a trade. Now, let's do an example for you to understand it better. Now, let's say that we have done our analysis, we have done our technical analysis, we have done our fundamental analysis, and we have been able to speculate that the value of GBP USD is going to rise. Now, in actual fact, it's going to rise from 1.3557 to 1.3567. Let me highlight it for you to see, from this to this. So now the question will be, what will be your profit if you place a trade with a one standard lot? Now, the first thing that you have to do is that you have to find the change in value of the currency pair. So I told you that GBP USD moved from 1.3557 to 1.3567. So what do you have to do? You have to do the subtraction, right? So subtracting 1.3557 from 1.3567 gives you a change in value of 10 pips. All right, the change in value of an asset is called pips, all right, or currency pair is called pips. All right, so we have learned a new term again. All right, so the change in value becomes 10 pips. Now, the next thing that we are supposed to do is that you have to multiply the change in value by the lot size that we place on the trade. All right, so now the change in value is 10 pips. Remember that in the question, the lot size that we place is one standard lot. Previously, I told you that one standard lot is equal to what? 10 units of your base currency. So it will be 10, all right, 10 pips times one standard lot, which is also 10. So 10 by 10 it gives you $100 as your profit. All right, so that is a very simple understanding of how profit is being calculated in forex trading. You cannot trade the forex market every single day. No. When do you trade the forex market? Now the forex market is open 24 hours a day, 5 days a week. All right, so it opens from Sunday evening at 10 p.m. GMT to Friday evening at 10 p.m. GMT. All right, so you can only trade between those times. All right, so it actually tells you that you cannot trade on weekends. All right, so Saturday is not part, and majority of the hours in Sunday is also not part. Okay, so that is that for when to trade. Now, how to learn forex the right way as a beginner. Now, this is one of the most important things that a lot of beginners ignore when they are trying to get into the forex market. Now, education in forex is very important because education will actually determine whether you become profitable or not. That is why education is very important. Now, as a base form of education, I always advise that if you are a complete beginner and you don't know anything about forex, the first place that you have to go is babypips.com. all right, babypips.com is a free website that has a lot of beginner information on forex. It is very good for you to start with. The website is very interactive. It is user friendly. They have made a thing in a course form, so as you complete it, it's like you are moving through a course, and it's very interesting. So I advise that you stick with Baby Pips when you are a complete beginner trying to enter into the forex market. And again, YouTube is also a very good asset when it comes to forex trading. There are some concepts that you may not get in babypips.com, so that is when YouTube comes in. So you go on YouTube, you search for a particular concept, and you get the explanation for that concept for you to get that wholesome education that you want. Now, one downside about YouTube is that there is a lot of chaff and there is a lot of misinformation when it comes to forex on YouTube. That is why I don't want to recommend any channel. All right, but of course my channel is there. All right, Trading with Ben K. Make sure that you subscribe and then you like the video, and then you press the notification button. Anytime that I upload a video, it will notify you, and then we move through this forex journey together. Now, another way that you can learn forex is through paid mentorships. All right, a lot of people think that paid mentorships, the mentors are there to take your money and all that. No, it is not like that. In this forex market, at some point in your journey, you need to pay for mentorship, because there are some things that the mentors know that is not on babypips.com and on YouTube. All right, it's only the mentors know. And these mentors have been able to figure it out because of their years of experience and years of sitting behind the charts and studying the movement of price and all that. So that is the reason why it is always good to pay for mentorship. All right, I am available. If you want mentorship, you can contact me, or you can DM me on my Instagram account and let's talk about it. All right, I'll get to know your level, whether you're a complete beginner, whether you are an intermediate or you are advanced learner. We can talk about it, and we can start from somewhere. All right, so paid mentorships are also a great way of learning forex. Just find a great mentor and then you'll be fine. I'm available. Now, how to create a forex account. Now, in creating a forex account, the most important thing that you need is a forex broker. Now, what is a forex broker? Now, you cannot place the forex trades on the market directly yourself. what you need is a middleman that will place the trades on your behalf, and that middleman becomes the forex broker. Now these are the well-known forex brokers we have. And we have IC markets, we have XNES, very popular in Africa. You have HFM markets, we have Oanda, we have XM markets. All right, so all these brokers are very good. The one that I can vouch for is XNES. Okay, this video is not sponsored by them, but I'm saying that I have used XNES for, who knows when I started trading forex, and they are very good. Okay, so anytime that you're looking for a broker, try XNES. They are very good. I'm saying this out of experience. I've used them and I have never encountered any problem with them with regards to deposits or withdrawal of my money or my profits that I've made in forex. No, they are just so good. So I think I'll vouch for XNES in this regard, although the video is not sponsored by them. I think in the future what I have to do is that I have to make a separate video concerning how to create a forex account with XNES from the beginning right to the end, right, step by step, showing you all the important things that you have to do for your forex account to be ready in that regard. Okay, so that is that on how to create a forex account. I don't want this video to be a very long video. That is why I don't want to add that. Now again, after creating the forex account, you also need what we call the trading platform for you to actually place your trade. Now where you actually place your trade is very important. So the main ones are MetaTrader 5, MetaTrader 4, and CTrader. All right, for this I have not used it before, so I cannot talk much about it. MetaTrader 4 is also quite outdated, so I won't vouch for it. What I recommend is MetaTrader 5. All right, so you can download it on your Google Play Store or whatever it is. All right, so make sure you download MetaTrader 5 as your trading platform. Now I told you that there are what you call two main analysis in forex. All right, so technical analysis and what fundamental analysis is very good. So these are the two main analysis that I spoke about. Now in doing your technical analysis, the trading platform that you use is called tradingview.com. all right, it is free out there. You can go there. That is where you actually do your chart analysis. You have all the information about the forex pairs there. Every forex pair that you are looking for is there. You can click on a particular forex pair and then see how the price is moving for that particular pair. So TradingView is a very good platform when it comes to technical analysis. That's what I use, and that is what I've been using all this while. And again, on fundamental analysis, you also have investing.com and Forex Factory. Both of them are very good sources of fundamental information. I told you that fundamental analysis has to do with news, economic data, and then geopolitical events. So anytime there's something coming up in the forex market, you will definitely see it either here or here, and it will inform your forex trading decision. All right. Now I told you that I'm going to give you a strategy, a bonus strategy that you use as a beginner, and that strategy is called a double top and the double bottoms. All right, let's get into it. Now I only observe my double tops and double bottoms on the daily time frame only. After observing it on the daily time frame, I scale down to the 4-hour time frame to actually trade it. So now let's see what happens here. So we can see that price actually goes up to this point, stalls, comes down, goes back again to the same point previously, and then drops completely. So you can see that it forms two peaks right here and then right here. So that is a double top. Now let's go into the chart to see a real example. Now this is a typical example of a double top strategy. You can see the first peak here and the second peak here as well. Now the second peak is where the magic mostly happens. So what you have to do now, after the first peak forms, now it will go down and then come back. Now you have to wait at the second peak because this is the moment that you have to sell. Okay, so you scale down to the 4-hour time frame. All right, let's go to the 4-hour time frame. Okay, all right, so this is a 4-hour time frame, and then you look for a candlestick chart pattern and then place a sell. All right, double tops are for sell. It is a very good strategy, and you can make lots of pips from this strategy. Always the neckline, which is depicted by this line here, all right, is a very good area for a take profit. All right, so that is a double top strategy. Let's go to the double bottom strategy. Now the double bottom strategy also carries the same idea as a double top strategy. It is just a mirror of the double top strategy, right, just on the opposite side. Now again, as I said earlier on, I always observe the double tops and the double bottoms on the daily time frame, and I scale down to the 4-hour time frame to actually take the trade. Now what happens here? So price goes down to this low and then climbs back to this point and then goes back to the previous low right here to form two bottoms. All right, so that is where the name is coming from, double bottoms, this point and this point, and then price rallies up. So this is a typical buy trade, right? Always the second low is where you have to find your buys, right? So let's look at a typical example in the charts. All right, so in the charts on GBP USD, this is a very good example of a double bottom strategy. All right, you can see the two lows right here, the first low and the second low. So you can see the drop of price all the way from this point up to this low here, and then the price tries to get back up, but I mean it can't, so it drops again and then comes to equalize with this low right here. You can see that they are on the same level, and then price rallies up again. So it is at the second low right here, that is where the magic happens. That is where you place your buy trade. I told you that we don't trade on the daily time frame, so what you have to do is to go to the 4-hour time frame and then look for candlestick confirmation pattern and actually place your buy trade. All right, I think I have to do a whole new video on candlestick confirmation patterns. All right, so you find your confirmation pattern right here, whether it's a bullish engulfing or a morning star or a maribozu. There are so many of them. I have to make a separate video about candlestick chart patterns. So you find your confirmation candlestick chart pattern and then place a buy. You can always take this level to be your take profit. I think you'll be good with it. And let's measure the pip count. This level right here will be your take profit, and then let's pick up our measuring tool, and then let's see the confirmation right here. Okay, all right, so that is around 180 pips. 180 pips. Imagine you are trading one standard lot with 180 pips. How much are you getting? That is $1,800. Yes, that is $1,800. I hope you have understood the concept or this strategy known as the double top, double bottoms. Let's continue. Now that we have been able to get to know the strategy that you are going to use in the Forex market, now the final thing that I want us to discuss has to do with trading psychology. Trading psychology. It is one of the most important things that if you want to trade this market successfully and make profit, you can never ignore. Now, one popular Forex trader in Africa puts it this way. He says that trading psychology is equal to risk management. I agree with him 100% on that. For this, I agree with him, but there are so many controversial things that he says that I don't agree with him. But for this, I fully agree with him that trading psychology is equal to risk management. Now, what is risk management? Making sure that you are not exposing all your accounts anytime that you are trading. That's basically risk management, all right? So, for example, if you are a beginner and you have a $50 initial deposit, you have created an account with probably Xness or any of the brokers that I listed in the previous slide, and you have created an account with them with $50. Now what you have to do is that you divide the amount into 5, such that every trade that you take means that you are not losing more than what, $10. That's basically risk management. All right, that's basically it. Because if you don't do that and then you expose all your $50 in one trade, anything that goes on in the trade means that you are losing your entire $50. I hope you get it. It means that you are losing your entire initial deposit of $50 in the trade. I hope you get it. Yes. Now, another concept under trading psychology that a lot of beginners tend to ignore is stop loss. Some trade without stop loss. Never do that thing. I always place my trade with a stop loss. What is stop loss? Some people may ask me. Stop loss means that if I go wrong on a trade, stop me out at this level so that I don't lose all my money. That's the basic meaning of stop loss. All right. So anytime that you place your trade, make sure that you place your stop loss as well. Now, there's another concept called revenge trading, something that you shouldn't do. Somebody places a trade, he loses the trade, but he gets so much pissed off and angry for losing that particular money that he wants to enter the market right there again and then try and then regain the amounts that he lost. The market will punish that person. You are going to lose more money if you have that kind of mindset. That kind of mindset is not good for Forex. Another thing that a lot of people also do or also experience is called fear of missing out. Shortened as FOMO. There is a particular trade that a person wants to trade. Perhaps you have seen what I talk about as double bottoms. You have seen the setup forming. You have seen that a double bottom is forming. But on that particular day, he's not supposed to trade because that day is a bank holiday. He is itching to trade on that day. Now, there are days in Forex you don't have to trade. All right. Probably subsequent videos will talk about it. Example is bank holiday. All right. So a pair like if you have Euro bank holiday and you are trading a pair like Euro USD, know that you are just putting yourself at risk. All right. You are not supposed to trade that day. But if you have fear of missing out, you feel that the setup is so good or the strategy that is you are looking on the chart is so good that you are itching not to lose that amount of money on that day, because perhaps you have waited and waited and waited for that setup to arrive, and now it arrived on a bank holiday. No, you still don't have to trade. Discipline is part of trading, and it's something that you have to learn and learn it well. Now, the last thing that I want to talk about is greed. All right, you have placed a trade, you have made some money, you still feel that there is a lot of money for you to be made in the trade. No, just take your money, withdraw your money, and then buy yourself something good or save your money elsewhere. But greed will make some people trade and retrade and retrade until they lose all their initial capital or their initial deposit. Okay, so these are the things that I want to talk about that as a beginner you should be very, very wary of. Okay, another thing that I didn't add to the slide, which is also very important, it has to do with patience for your strategy to come up in the charts for you to trade. Sometimes it can take days, it can take weeks, it can even take months for a strategy to show up. But having the patience for it to show up and trade it is also a very virtue, which is also is a very good virtue in the Forex market. I believe that you have enjoyed this video. Make sure that you don't forget to subscribe to the channel, like the video, and then press the notification button for more videos in the future. I appreciate all of you for your time. Thank you so much. I'll see you another time.